Bitcoin is still hovering above $30,000, and although it experienced a slight pump on the CPI release update, the momentum was short-lived. But what's more interesting is a recent price projection by Analysts, which estimates that BTC could hit $50,000 this year and reach as high as $120,000 by the end of 2024. Increased miner profitability per BTC mined means they can sell less while maintaining cash inflows, reducing net BTC supply and pushing BTC prices higher. Despite a remarkable 80% price surge since the beginning of the year, Bitcoin is currently trading at just above $30,200, markedly less than its historic high of $69,000 set in November 2021. This is an upgrade from the bank's $100,000 estimate as recent as April. According to the report, this rally will likely be fueled by increased miner profitability. The rationale is that miners will soon be able to liquidate fewer bitcoins as the price goes up, ultimately managing to meet their operational costs while holding on to more BTC. This supply squeeze could reduce Bitcoin supply by 250,000, bringing down its inflation rate from 1.7% to 0.4% year to year. In our letter from last week, we also highlighted a few trends that have in the past signaled the start of Bitcoin's bull run. While we may not be certainly headed for a rally, BTC is showing a considerable amount of strength, which could be a sign of accumulation. Moreover, it is also noteworthy that the growing popularity of Bitcoin NFTs, ordinals, is another trend that is increasing on-chain activity and miner revenue. In Q2, Bitcoin ordinals trading volumes reached $210 million, up from $7.18 million in the previous quarter. A reduction of this magnitude would decrease daily Bitcoin sales from the current 900 to just 180 to 270, a dramatic reduction in the annual BTC supply. Additionally, Bitcoin's supply mechanics, which will have the daily mining limit in April or May 2024, further contribute to this reduction. Bitcoin will go through a halving in 2024, meaning that the reward for mining 1 BTC will lower by half, making BTC more valuable because less BTC will be in circulation. The last time Bitcoin halved, the industry saw its all-time high at $69,044. While speculative high-value Bitcoin predictions have been a regular occurrence in the past, it's important to remember that these forecasts often don't pan out. For instance, a Citi analyst predicted Bitcoin would reach $318,000 by the end of 2022, but BTC finished out the year at about $16,500, a 65% dip. Meanwhile, U.S. inflation cooled down to 3% in June, as per the latest CPI update by the Bureau of Labor Statistics. This is the lowest rate at which consumer prices have grown since March 2021, marking a significant drop from the highs of 9.1% in June 2022. This news sparked optimism in the broader financial markets, pushing both the S&P 500 and Nasdaq to record new highs for 2023. However, the core CPI, which is one of the most favored measures of inflation, still sits at 4.8%. In other words, things are moving in the direct direction, but there's still ground to cover to reach the 2% target. Which is probably why the markets are anticipating yet another rate hike of 0.25% later this month.